Hey there, traders. Thanks for checking out this video from NetPicks. And as I always ask, please hit subscribe and like this video if you do. And after you watch the video, if you have any questions or comments, feel free to pop them below. We're going to talk about the 3 black crows candlestick pattern. And actually, it's just a bearish reversal candlestick pattern. And it appears in an uptrend. And many traders are going to use it just as it's described, a reversal candlestick. But if you simply sell when this pattern appears, you're just looking at amassing a large amounts of losing trades. Because this pattern, just by itself, it's missing one important thing that you need to know before you take a trade. And we're going to cover that in a second, but let's discuss what this pattern looks like. Essentially, we are looking for 3 bearish candlesticks with lower opens, lower closes that show up in a market that is in an uptrend. And while it's described as black crows, candles can be any color, just as long as the close is lower than the open and the wicks are just not too large. Now, these candles are not going to look exactly like this, especially in the stock market where you see gaps, but the same idea applies. There's also rules that will state that the open of the second and third candle has to take place inside the body of the previous candle. So does that really make a difference to it? Well, what we're seeing is the opening price being higher than the previous day's closing prices. So will that make a substantial difference in the success of the pattern? Well, we're going to get to that. But the bottom line is we need to see the current candle closing lower than the previous candle. So what does it mean? Well, it's a strong visual bearish pattern. It stands out on a chart, pretty easy to see when they happen. So what they're representing is just a strong bearish side to the market. So when a trader will see it in an uptrend, emotions can start to come into play. If a trader is long and they see these 3 candles showing up, they may look to get out of their position. A trader may also think that we're about to see a reversal to a downtrend. Regardless, some action will be taken. So if we consider that the gap in the open price, as the original rules suggest, what traders will see is the bulls getting taken out when they try to go long. So once price hits lower, buyers will exit their position, which just fuels the move to the downside. This chart here is actually just a ticker, MFSL, and it's currently showing the pattern. The chart is in an uptrend, and it's running into all-time highs and psychological round numbers. It fulfills all requirements of a bearish candlestick pattern. So if you were long that momentum green candle, what would you be thinking right now as you see a stock shutting down like this? Would that be enough for you just to sell the market? Well, that's the point of this whole video. Because just seeing the pattern should not be enough for any trader to decide to enter a short position, because all we're really seeing is sustained bearish action over 3 periods, 3 hours, 3 days, 3 weeks, 3 months. So keep that in mind. So how do we trade it? Well, the biggest takeaway is do not treat it as a bearish reversal pattern without some type of confirmation. Instead, let's treat it as a sign to look for a continuation move back in the direction of the uptrend. But first, let's just talk about that confirmation for a bearish move. So in order to do that, you have to understand what the price action movement of a trend is. An uptrend is just a series of higher swing highs and lows. Downtrend is a series of lower swing highs and lows. And when you start getting a combination of those, it's just a trading range. So in an uptrend, price movement will look something like this. So as long as that trend structure is in place, looking to short the market is not a wise move. This stock here is in an uptrend, the 3 crows set up, and if you short, well, you're in a losing trade quite quickly. So in order for this to be a legitimate contender for a short trade, you would want to see, at a minimum, a lower swing high plotting on the chart. Now you could use a technical indicator for trend, but price is my favorite approach. So the confirmation you'd be looking for is a price pattern trend direction change where a swing low has been taken out and we have a lower high. So look for the trend structure to change to lower highs and lower lows. You can use that pattern as a trade setup. So if you're seeing a change in trend, then find your entry short using whatever technique you use to enter trades. Just know that when a trend really changes, it doesn't usually happen with just a quick movement, right? Because those holdings long will be doing their best to hold that trend up. So sometimes we get chop before a trend change. So what is the better way to use it? Well, let's use it as a long trade setup. So we talked about what makes a true trend reversal. We're looking at higher highs and higher lows changing to the exact opposite. Okay, we're not looking just for a candlestick pattern. We're looking for a change in market structure. So the value in the three crows, I mentioned it already, use it as a trading setup. So imagine this is an uptrend in price. The pullbacks, the corrections, are where we would look for the pattern, as we note with that red arrow. Once the pattern's found, we would look to find a reversal back in the direction of the trend. So why does this have merit? So remember the emotional aspects of this pattern. Traders see the pattern, they don't want to miss the short, so they sell it. Those holding long, well, they're going to exit their position. Price reverses, takes out the shorts, and the buyers that exited buy back in. And those who are already holding long add to their positions as they see price start to head back up. So let's take a look at this chart. So price turns from a downtrend to an uptrend. A correction in price takes place, putting in the three crows. A trade entry can be a simple break of the third crow, a trend line break, or some type of trading indicator entry like a break of a smaller period moving average like a 5. Now you see that black star there? Price was in a structured downtrend. And after that pattern shows up, you look for the pullback, trade the reversal short. Now the three white soldiers, the exact opposite of what we just talked about. So in this case, you'd be looking for these as a pullback in a downtrend. And while the original and often taught method is a trend reversal, you now know, use price structure for a trend reversal. This is a trading setup. So wrapping this video up, using it as a trend reversal pattern, it just discounts the importance of using trend structure. Using the patterns as a shorting signal, that is going to fail a heck of a lot more than it's going to work out. The better use is to look at them during the corrective move of an uptrend. So we discussed the emotional aspect of this pattern, and we look to take advantage of that. Can you sell when they appear? Look, if you're stuck on the normal teachings, if I were to short it, I would be quick to cut any trade that went against me. The safer way is to consider using them in the manner that we just talked about. I appreciate you watching. Again, make sure you hit subscribe, like this video. Hey, any questions or comments about this, let me know, and we'll see you at the next video.